Everybody, Mike Fairborn here. Great to be back here with you for markets and sectors. We're looking at today's market, folks. I want to talk about maybe some dual indicator strength for the market right now that we're seeing. A couple of interesting indications that we're getting from a couple of technical indicators, as well as not just what we're seeing now, but how that could spell more strength going forward as well, as we're just getting past this kind of binary event that we were talking about last week. So I'll look forward to diving into that with you all today. Do recognize many of you in the chat. It's great to have you here. Happy Friday. Hello to you, Riceberg J. Richardson. We've got Michael, Gary, many others in here in the chat, folks. That's exactly what it's for. Any questions, comments you have, throw those in the chat. I'm joining the chat today by my manager, good friend of mine, Scott Thompson. You'll see him in the chat as ST. Great to have Scott here on board with us. But what I want to do is go ahead and get started here. So what we'll do initially is just jump into some disclosures and get the show on the road. All right. The material is intended, this material is intended for general informational and educational purposes only. Now, the paper money software application is provided for educational purposes only as well. Investing does involve risk, including the loss of principal, and for some products and strategies, more than the loss of your initial investment. Now, we do have some futures disclosures there. Futures and futures options trading involves substantial risk, not suitable for all investors. But that disclosure is simply just for us to look at the charts. We do not trade futures in this class. We have a couple of other classes where we do look at futures specifically, the futures setups in the paper money version. Also, past performance is no guarantee of future results. Okay, just a final slide in here. We did look at the stacks last week. Now, historical data should not be used alone when making investment decisions, and the stacks is not a tradable index if, in fact, we do venture on into that today. But as you can see right there, there are a few different notes there to take a look at in terms of other disclosure items. Okay, well, let's do this. Let's move on into a look at our markets here, just initially, taking a look at the big picture here, folks. We did have, as you know, a big binary event last week as we kind of broke it down. What was happening in terms of the Straits of Hormuz, for example? Was it going to be open? Was it going to stay closed? We did go through some risk characteristics and risk factors of that, and yeah, we saw a very interesting continuation of that as we saw more indications. As a matter of fact, today's news, even though we did reach above the top of this measurement gap that we've been looking at for quite some time. You can see the measurements over here. We really hit our highs yesterday above 7,000. But what was interesting here is we did extend higher today on news that Iran themselves said that the Strait of Hormuz is open. So a great positive development there in terms of for the bulls, etc. And good indications here for just America in general, you'd have to say. But then also, the president did note that Iran did state that they were indefinitely, they stated indefinitely that they were not going to pursue nuclear weapons as well. And so you kind of got a double smack on that. That's been a big bottom. As you can see, a big change. I'm gonna take a look at our posture here in just a second, folks. But honestly, how many of us were looking at this bottom right here? It was quite interesting. That is a V bottom and then some as we went to the upside over here, right? That's a big, huge reversal. But remember, if events could change, which they did change pretty quickly, you're seeing the events of that. If you can take that Iran situation, make it better, and try to put some closure to it, or at least more signs of closure to it, there you go. There's the response of the markets right there. Now, we talked a couple of weeks ago about a morning star-ish pattern, and some of those patterns can be pretty powerful off the bottom. Those are made up of 3 candles. I talked about this, a couple of different scans, morning star, evening star, in the ThinkScript class yesterday in terms of scanning for those, but they can be interesting in terms of big picture moves that can happen. Obviously, you get moves like that. There are fundamentals that are tied to it, but it's not to say that the charts understand the fundamentals. What would happen? I think a lot of it was just kind of interesting how it did unfold, but there were big consequences potentially either way that we went through. Uh, you know, uh, so there you have it, a V-shaped type bottom above the highs. So very, very bullish. Great to see. I'm going to talk about a couple of indicators today, as I mentioned, as we go into this in more detail. But before we get into that, I did want to state also uh, quickly that there is an upcoming event. Normally I do this right after the disclosures, but I'll just go ahead and show you guys right now as we've got it up here. There is a Chicago market drive coming up May 16th. You got one in San Diego, as well as another one coming back into Chicago. And I wanted to state also that you guys are just aware of it. We did have a couple of new, well, we have a new, basically a new class video series that's referred to as New to Investing. I'm going to post a couple of links in the chat for you guys to take a look at there for this class, but we're excited about it. There is one that happens later in the day as well. Let me just post this real quick. There we go. And just a quick reference on that. That is going to be, yeah, on Thursdays, the New to Investing class with Rachel. We have that as well. At the end of the day, it starts at 2 p.m. Mountain Time, really 4 p.m. Eastern. So just wanted to throw those in, make sure you're aware of that. Okay, so with that, let's take a look at market posture initially. Like, we want to start off with that. I think we're going to have a pretty good idea where that market posture stands. I'm going to break this down in more detail here for you in just a bit. But here it is. So we've got a 50, and then a 100, and then a 200. That gap up, we kind of came right to these upper two levels, clearly above the 200-day moving average, and then right here. So anytime you're going to be hitting new highs, yeah, there might be a 100% chance that you're going to be above all these three lines. Yeah, obviously there should be, right? As you're hitting new highs over here, but some really solid strength in terms of trends, right? The long-term trend, maybe more of the intermediate term in the green. That's the 100-day, the intermediate term trend. And now the yellow, of course, over here, I'll just draw it in, short-term trend. So all three are showing market strength. So very, very bullish. A couple of other scenarios I want to highlight here for you in just a second. But before we do that, let's go to our next deck just to show you on the weekly chart what this looks like and see if it is a little bit more comparative to what we've seen in the past. You can see the pullbacks, not too unusual. By the way, this was another key sort of, tied to a political event. I think we all remember this. This was the tariff dip that we saw. It too did break below, in this case, the 40-period weekly moving average. We're in a weekly chart here. It's a 3-year weekly. We crossed below, we crossed above. We did not see the 10, though, go below the 40 in this case. We were getting quite close, and we talked about what events could take place in order for that to happen. They didn't happen, right? In other words, the Strait of Hormuz was opened. So with that move, what do you see here on a weekly chart? I'm seeing, and I think you're all seeing this too, new highs coming in. There are new highs there. Now, if we go into our regular market and sector review, we've been talking about a couple of quick notes over here. The McClellan oscillator, right down through here, right, that does take a perspective of the NYSE. And with that NYSE, you can see down here too the advanced decline line at the bottom, giving us a solid indication, right? Because these are moving averages that are occurring. The strength of moving averages in terms of a measurement of EMAs, exponential moving averages, and how they're unfolding on a much bigger basket of stocks. These are breadth indications. We're getting solid breadth, and right here, on a larger term basis, we are getting new highs. In fact, I'll pull this up right now just to highlight this for everybody so you can see it. We wanted to jump into it. We're just getting new highs as we're getting new highs here. But again, this is a reference to the S&P 500. Okay, why this is important, again, is because to get an extension of trends going higher, for an extent, a lot of times you do need a basket of stocks going up as well. We'd mentioned that the Mag 7 represents about 40%. It's been noted at least a few months ago, 40% weighting of the S&P 500. Massive, but to get trends to extend, you've got to have oftentimes a bigger basket of stocks. And so we were looking at this last week. That is a real interesting note. That's a positive coming off of that V-shaped type bottom. Okay, so tied to this though, the last thing before we're done, The McClellan, we dipped below the minus 100. We got back up above the minus 70. Tom McClellan himself says 2 to 3 weeks rally is what you can generally expect on the market here. 2 to 3 weeks. We are ending right now. It's about 2 weeks right now, Friday. So the possibility of another week over here. But what there also could be another possibility out there as well. And I mean, there's several. Instead of just running straight up, a lot of times on those V bottoms, it's not always expected for it to just continue to go like this, right? I mean, obviously indefinitely. That's tricky, and that's a pretty big bounce that would have to take place over here. So what I wanted to look at though are a situation that we'd seen kind of previously to this market. I'm going to go to a 2 year here to highlight this for everybody so you can kind of see this. I'm just going back to our last major political type event that, by the way, lines up fairly well, even in times of the year. Okay, where did we bottom last year? Well, you guessed it. It was right around April. Where did we bottom here? Just about April. That's about a 1 year right there. Notice what happened prior to April. We saw a little bit of a pullback here, and we did. And we often will times will say this, the markets aren't, they don't give us the exact same setup over and over, but they can kind of be familiar. They can kind of rhyme a little bit. You can see indications, from different time frames that were similar. Now, just a quick note on this. When we started to break out of this range over here, right down below, you can see it right in that AD line right there. Look what was going on. We were breaking into high territory right there. Look at it. Do you see that? Where were we breaking into new highs at? Not over here. Not over here at all. In fact, it was right down here. Do you see the break? Look, break it. We weren't above this level on the chart. It was down here that the breadth of the NYSE was taking out highs. Okay. It was coming earlier, and it will oftentimes, and it can precede that move going up. It's an important thing to note as we take a look at this, looking at bottoms, particularly with the market and NYSE. So that's just the advanced decline line. All right. Now, if I go over here and I pull it up, you're just going to see it right there. If you ever wanted to add this in, advanced decline right there. I've got the 2 McClellan oscillators as well. You can easily just throw in there so you can check it out. Okay. So there you got it. All right. So that's kind of, it was also sort of like a political thing. I mean, tariffs, and here we are again, a geopolitical, right, situation. And there you got this one. Now, let's continue on. I wanted to really talk today just we'll dive into markets a little bit more deeper here. We'll go into some of the other markets too, like the NASDAQ and whatnot. But I wanted to highlight this while we're on the S&P 500. All right, so this major move to the upside, if I go back to my regular charts here, I'm just going to take a look at a couple here. Here is the S&P 500 index. As we look at it, and as you can see up top, okay, so SPX over here, a couple of different things. I'm going to jump back to my 2 year again. I'm just going to capture this time frame and pull it over. Now we're looking for indicators, not that are so much cyclical in nature, maybe like stochastic, moving averages can definitely be cyclical with price, but we're trying to find internal strength of the stock that might give us signs that prices could be stronger going forward. Now, a quick note out of this, as you saw down below, we did reach this point, starting with April in the bottom corner over here. Notice off this bottom, look at the rally to the upside. Okay, did we take out a new high? Indeed, we did. We're looking for major types of reversals, and sometimes we can pick up on this with the RSI. Now, a lot of times we could say, yeah, that RSI was oversold. And a lot of times when you get an oversold condition in the RSI, looking at the market specifically, we may in fact be under, okay, or they say oversold. Sometimes people will say it's undervalued or whatever, but it's oversold is a better way to state it. Now, when we look at RSI, relative strength index, measuring internal strength, even though, the index part is tricky, indicator that Wells Wilder introduced in 1978. He said it's not just the RS, relative strength, it's an index, but the index is based upon itself, whatever we're measuring. So it's not across an index, it's the stock itself. Now, there were a couple of different ways he looked at it. Yeah, oversold, overbought if you're trading above these levels, right? The 70, the 30 down below. Okay. But and that can be one indication. We see prices trading within this range. Sure. That's oversold, that's overbought, but also it is a momentum. I can't spell that all out, folks, but I will do MOM for short. Momentum indicator, okay? It's momentum, measuring closing prices. What do you see with the RSI over here? Do you see it's going up over here too? It's confirming price action. That means in terms of closing prices, percent of closing prices over the range that we're looking at, the default of 14, we are showing strength. There's strength in here. Now, let's move forward here into our current condition. Oversold. When was the last time we saw oversold? Well, it happened to be last April. That's it. April, sound familiar? I mean, we're kind of there. Political event, political event. Okay. How about the RSI now? Well, it was oversold. That was one of the conditions, but the other condition is simply just RSI strength. We're getting that strength right now. And a lot of times traders will say, well, Mike, that's not always a great sign. It could be what Wells Wilder would say. There's underlying strength, but yes, it could be to the top of the range. We could have shot up a little bit higher. And so therefore, we could have a bit of a pullback coming down too. That could happen. I'm going to clear everything right now. That's a lot to look at. So you guys ever notice that when you see prices jump up, stock, index, whatever it is, a lot of times they don't just continue to fly high and just keep going and going, right? Sometimes they might come back and rest on a prior high, like kind of over here. Oh, there was also a gap as well. We came back down and we rested there. You know when we rested there? We rested there when we got above 70. We kind of pulled back down. But my whole point here is what happened next? Was it a sign of internal strength? Did we really see enough buying pressure coming in here? I mean, according to this indicator, we did. You see that run? In other words, there was a consolidation period after. Folks, if you're going to get a V bottom, I mean, a lot of times you don't just have a lot of strength, okay, to just keep going and going and going. It can be tricky. I mean, that's a big bounce off the bottom. In fact, let's just measure it right now. You tell me what you guys think, though. Maybe maybe it is going. Maybe you think it's going to the moon. That's a 13% bounce in about 2 weeks, maybe a little bit more. Let's see. No, it should be about 2 weeks time frame as I was looking at it. A little bit more than 2 weeks, maybe about 2.5, actually off this bottom. I think I was measuring off this price, but you're catching my drift. Slightly above 2 weeks, right in that time frame, heading maybe towards a 3-week rally, which fits, by the way, into the McClellan time frame pretty nicely. Okay, so my point is RSI showing some indications, but we've got another one because I was mentioning early on that we had kind of a dual indication here. Okay, just take a quick peek down here. Okay, Kelly, it's kind of steep, right? It's a little bit steep. It's a big move. And by the way, what about the news that just occurred? Has the news kind of unfolded? Strait of Hormuz, according to Iran, they're saying it's open. It's open for business. Now, I do understand that some of the countries over there are a little bit cautious. I think that the Norwegians, yeah, the Norwegians and another group over there, it may have been another, yeah, it was another group in that neck of the woods. They're a little bit cautious about going through still, getting sunk. They don't want to get sunk. But, we're seeing that, but the news is out. Now, that could be a positive still for the market down the road because, let's say, for example, oil prices could come down. That could provide, more spending money for consumers and could help the economy. help earnings within companies as well. Like we talked about last week a little bit. That's kind of the process. But that remains to be seen. But hey, a lot of times just waiting to see what we might get over here. I mean, if it comes back down and holds a prior high at 7K, 7,000 could be interesting. Next one we want to look at. Folks, I've looked at the MACD for a lot of years. I think it's an interesting indicator. It's also known, just the way it works, it's kind of like a signal amplifier that traders will use. So it lets us kind of see, kind of like the RSI, but different calculation completely, what's going on behind the scenes. Now, I do like the two line. I like it simple. We could do something different, but I mean, there is a histogram in there. I'm really just looking at the two lines right now. I want to highlight this for you. In fact, let me just thicken this up real quick. The default is not that thick, so we just want to see what's going on. We'll get the average in there. Why not? Well, we don't need to do the average. That's fine. We're just looking at really the main line MACD, which is the thick line down below. Now, I'm going to show you this because remember, this can be an indication also of strength. Now, where was the strongest run over the last 2 years? Right there. Okay, that came out of the base. Where is the next strongest run? And it could be the strongest run over the next 2 years. Right there. We are breaking above highs here too. Notice that? Geez, if I could, well, let me do this. Let's expand this up so we can actually, number one, you got to see it. Number two, I got to draw the straight line. Can I draw the straight line? This new mouse is tricky. There we go. It's somewhere right there. Just we have broken above it. Now, that's a real positive because you don't want to be holding below these highs. In other words, it's showing internal strength, and we could see a further move. Now, notice it goes down over here, but what did price action do? Shot up huge. It's the spike clearing highs, referred to as positive divergence or in line. Okay, but we cleared that level pretty sharply. And by the way, there's a huge gap. We did a ThinkScript class on this too, but this distance between the first exponential moving average and the second moving average right here, the distance between those two, those exponential moving averages, when the 12 is pulling ahead of the 26, it's just going to move up faster. And yes, there is a distance it'll oftentimes have from the average line, but it's the steepness of this line where you're really just seeing the 12 EMA, these are both EMAs, pull ahead of the 26. It's a fast move. It's the fastest move, or at least maybe the second fastest move we've seen. Price strength like this can be a positive for moves going forward, is what the way some traders will use that. So really, really quite bullish. Yes, we still want to keep an eye on what's going on in the markets for sure. That's important. I mean, in terms of news, etc. So park that in the back of your mind. But I did want to go through this and hit it kind of hard because yeah, this is fascinating, these developments. Real quick too, I wanted to make sure back in our markets and review, our market and sector review over here. Remember what we talked about? The Hindenburg-Omen spikes. They can be ominous. Okay, and they can present weakness coming down. But the main thing here is, again, weekly chart on this. Key point. 52-week new lows, a huge number of 52-week new lows and a huge number of 52-week new highs can cause a chasm in the market where you're going to get that omen spike, which can lead to a breakdown. Now, this is 2022, where we really saw a major market breakdown in 2022. We have not had that yet, and I'll tell you why. Because we might have got the omens, but we didn't get the lower lows and lower highs. And to be honest with you, it's going to be virtually, I won't say impossible, but it's going to be incredibly difficult at a new high to get an omen spike. And even if we did, it doesn't matter. I'll cross it out. It doesn't matter because it's got to be with the downward sloping trend. So we hit that heavy last week as we saw quite a few. And if you get a number of these, yeah, it can be sort of ominous as we mentioned. Okay, back to, in this case, let's take a look at the NDX. Where are we doing? How are we doing here? Really, really quite strong. Really a positive move going higher here. Think about the mags, and I have the mags set up here for us. There it is. The mag 7 right at the bottom. There is an ETF for this, but we don't talk about ETFs in this class, but we can add these guys all together and create our own index. So what's interesting about this is we didn't hit new highs within the MAG, but look what the NDX is doing. Yeah, NDX higher, MAG 7 not as high, but this is where the market weight is. So we're getting broad participation in this market, which is also considered to be quite a bullish sign over here. Let's go. I'm just going to post this into the chat so you guys have that right there, in case you don't want to type that all up. Yeah, there better be 7. There are. Okay, good. I don't want it to be the MAG 6 because MAG 6, frankly, does not exist. That anybody's used to. Okay, new highs here on the Russell as well. So small caps showing some strength too. Now, we can see strength too from, well, we can see strength in other markets when we're looking at the dollar if the dollar begins to break lower, which it is. Now, here's a look at the weekly dollar right here. Now, just to show you on the weekly dollar, it looked like there could have been a shoulder, head, shoulder, and we might get that. We don't know. Okay? We don't know. But for some of you, yeah, that might not be a positive if the dollar goes up. Because if the dollar goes up, it can put general weakness into a lot of assets. S&P 500 being an asset, it's just more difficult. A lot of times these are inversely correlated, S&P 500 and commodities too. So we're getting a couple of different hits with commodities, of course, with the news. Dollar, yeah, pulling back, but look at the futures over here in terms of, yeah, there's crude right there. So there is that pretty substantial pullback right there in crude. You can see, right, that is so volatile, folks. And by the way, let me just state this too, because we were seeing some pretty big moves in terms of what we were getting with oil type stocks that were taking this. I mean, it opened a little bit lower. CVX. Okay, how about FANG? Really tied into the oil. They've bounced back nicely, which is interesting for them, but still quite elevated and quite high. But yeah, maybe they will close up towards the higher end of the range, but that's going to be very, very tricky if oil continues to trickle down. If those ships keep going through the Straits of Hormuz in rapid succession, it really picks up, then you'd think, and I did hear individuals from the administration saying that over, I think it was the next month or so, don't quote me on that, it could have been 2 months, but uh, maybe back, down to the $3 gasoline, and some are saying even lower. Of course, that depends on what we see with that unfolding, but looks quite positive as we stand right here. Totally different from last Friday, or in a lot of ways, I should say. Now, here is the VIX. Now, when we look at the VIX, I want to compare the VIX. This is very, very important because it can give us, and it has given us pretty interesting insight into the past as to what's happened. As a matter of fact, we watched this VIX slowly in this class inch up higher here, and we had eyes on it as it kept holding higher and higher and higher lows. That's not always a great indication. As a matter of fact, if you're going to consolidate for extended periods of time, you tend to see this: a move up, a sharp move back down, down, down. Notice when you start to go up slowly, sometimes you get that spike. We saw that, and we did see the spike. Now, what's interesting, once you do get into these large areas with that VIX, what you tend to look for, and we'll go back to 2025 specifically, but oftentimes the VIX, when the VIX itself begins to do this and really come down sharp, there can be some spikes, but generally it will tend to stay in these lower ranges for quite some time. 15 on its way to 15. Now, it's not to say that it can't spike up and do a few of these coming down, right? And that could be different moves in the market, but keep a watch on this. If it continues to just kind of form this same way, lower highs and lower lows, positive for the markets, because we've got that inverse correlation there too. All right. Okay. Oh, Scott mentioned session will be recorded. Thank you, Scott. Appreciate that. Be sure to check out Scott's class on Wednesdays as well. He's got a great class there, Stock Investing for Beginners. That's at 2 p.m. again, my time here, Mountain Time, 1 Pacific, and it would be 4 Eastern. So a quick note on that. All right, let's do this. Let's go over here and I want to take a look at moving into sectors now. And let's go specifically into our sector grid, 6 month sector rotation grid. Let me throw this into the chat. I always get comments on this. I see them coming through. So I'm just going to hit this early. But here is your 6 month sectors. I think many of you do have it of the S&P 500. And we can easily track every single one of these sectors here. Now, this is not a think script, but I'll state it anyways. This is just a grid, but think scripts aren't guaranteed for timeliness or accuracy. But as we look at this, look specifically at where we're seeing the strength, the strongest portions, because a lot of times if you start to clear those prior resistance highs, it can be interesting going forward. I mean, in other words, are they as strong as the market? S&P down here, bottom right-hand corner. I'm going to say it again. Are they strong or stronger than the market? Other areas might be more defensive in nature. Defensive in nature. If we're on a big push here, these might be defensive. I'm not seeing too much of a spike over here. Even utilities. Yeah, I mean, historically, yeah, defensive in nature. Everything else, as you can see up top, materials, yeah, it had a run. It might actually be a little bit of a bull flag there too, possibly a flagging, right? But we are kind of up towards resistance. I would say energy cyclical. I've got to change that a little bit. It's more like cyclical. It's going to be depending upon, what happens in Iran for sure. But the other areas are coming off of the bottoms. Discretionary, right? Consumers having more cash or anticipation of that. Industrials, kind of similar to materials, still some strength though. Um, Technology, financials, and of course, communication services, which falls into that same similar category. So if we were stepping back and looking for potential strength areas, right? What we I just try to put arrows on each of these or lines. Here you go. Industrials, discretionary, communication services, infotech, and actually real estate's quite strong here too. But that can be tied really specifically to interest rates. So this one is one you just have to be kind of more familiar with specifically, what's going on with real estate as we just look at that, just big, broadly speaking, that particular sector. So, having said that, I wanted to look at a couple of different points over here. Just a quick note on the stocks within real estate, because some of those are REITs, and REITs may pose additional risks such as real estate, in industry risk, as well as interest rate risk and liquidity risk. They might pose additional risks such as those. Okay, so with that, let's go ahead and just highlight how we can break down some of these areas specifically here for us. What's moving in technology? I think you guys might already have a pretty good idea of that, but I'm gonna go over here and just pull it up again. Oh, sorry, that was the wrong one. Right over here. That's a look at our general markets, which is actually a good quick way just to see what's happening. The Dow, S&P, NASDAQ, and the Russell. But if we come back here and take a look at that, I'm going to actually take us into what I like to do is just the scan tab, just to quickly highlight what you guys have at your fingertips. Got to be in the scan tab up top here. Got to be in the stock hacker. We're scanning in the S&P 500, which is going to mirror every single one of those sectors that we just looked at. You can find them here, right? They're all within there. Every one of the stocks in the S&P 500 happens to be exactly in every one of those S&P 500 sectors. But technology, if we want to just look at that sector, come down here and just do a quick scan through it, hitting technology right there. Now, these are all of the sectors, but which ones are really moving? Let's just select all of them because some are going to be stronger than others. And I don't know if you guys, I'm sure many of you have been tracking this, but software. Have you noticed software isn't that strong? Software has been weak, and I mean really quite weak. across the board. In fact, let's just pull this up right now. Here's an index of software. So even though we're looking at sectors showing strength, what in this group has been showing? Um, there's the software industry itself. Now, you're getting a bounce here, but the trend's not even established. So when we go in and we look and scan through here, we can be mindful of a 1 week, or excuse me, a 1 month turnaround. What's been strongest over the past month? In other words, what's held up the best over the past month, and then also maybe done pretty well as of late. I'm going to customize this right now and highlight it for you. So we can change this. We have this information. I'm just going to actually, let me do this. I'm going to just change my 1 week into a 1 month time frame. That's currently only looking back about 3 days. So that was an interesting one. I'm going to change the title of this right here to a 1 month. If you guys don't have it, just let me know in the chat so I could share this with you. But a 1 month percent change, right? I'm just putting in the number of days. These are actual trading days. So number of bars basically. What does that performance look like now? There it is, 1 month. So I can come over here. Look what I have all set up here for me. There is my industry, the sub-industry posted here. I'm simply going to do this. I'm going to give it a chance to load up. One other nice piece of information is, and let's go ahead and just make sure we've got all the stocks showing up in this group. There's 73 companies that make up that index that we had just looked at with the strong chart. 73 stocks that make up that industry. It's taking just a second to load, but what I can do is just simply come over here and highlight it based upon where we've been seeing the strength. Okay, it's starting to come up already. This is pretty much the standout. This is how you organize it. Oh, I should have waited. Semiconductors. That's where the strength has really been in this group. And it's not, I mean, you've got three over here. We've got more loading up. But we're talking about a 1 month time frame. Let's go into some of those companies right now as we look at them, as we're looking specifically at strength. Okay, so potential strength in these areas. So Intel, okay, there's that move there. Again, we're thinking back into the markets. We just looked at the markets. The markets, NASDAQ too. V-type bottom. But with the V bottom, we thinking an indefinite move? Or are we thinking maybe some ebbs and flows in here? Perhaps. Maybe, right? I mean, this is normal. That's the normal kind of condition you'd see. Intel, for example, a series of prior flag patterns. Now, some are longer than others. They don't all fit, let's say, a swing trade time frame, but they are extended. We do have an earnings number coming up too. So what might we be looking at? We're not saying, hey, there's just great opportunities right now, because yeah, we just went from 40 to darn near, I guess we did hit 70 today. Looks like an intraday. But what else do we got? AMD. Okay, big run. Now we've noticed that after and historically, when we get the big runs, right, it's with the trend, ebbs and flows. Right now, it's showing strength. We looked at the market as potentially showing strength, RSI, MACD, and others going forward. So keeping an eye on these could be an interesting thing to do into next week. Could there be some of these mini flags, for example, NVIDIA, another one. Okay, NVIDIA just broke above this range. We've been so flat for so long in NVIDIA here. This is actually, yeah, this is July of last year. We were just there. This last week, end of July, first part of August, right about here. That's how long we've been flat. So, 9 months or so. It's incredible how long that's been flat. Just breaking out right now. Now, when stocks go sideways, we've talked about this for a little bit, for a long time, and they start to break out, possibly due to fundamentals or whatever. Let's just see it for what it is. Here's your move. Here is, in fact, the consolidation range, quite long. It's been a while. Could it go? I mean, that's what some traders might look at, right? We have some drivers out there in AI and others that are pushing this group. But I will say this too. That's three soldiers up. That's a three soldier up right now. I'm just assuming we do get, well, by well, let's see, about 20 minutes from now, when the markets closes, three soldiers up. A lot of times after that, what do you get? Consolidation. Are we getting that over here? Are there one, two, three? One, two, three. Three soldiers up, three green candles up. Indeed, we are. Let's throw this one out here. KLAC. Different, but still semiconductor nonetheless. Okay. So candlestick signs too that there could be weekly candlestick signs. Maybe it's time for a pullback, but nonetheless, maybe we're looking at strength, like we said, folks, going forward. Strength going forward. All right. I wanted to note some of the stocks that were out, I mean, in the news this week as well that do have news-related events tied to them. Netflix, if you guys saw this, we were down today. This was an interesting sort of a flag pattern coming up. Did you guys know that I guess their CEO, Reed Hastings, who's been around, what he's the chairman is what he was. I think he helped develop the company. He's stepping down as chairman, stepping down from chairman. So no longer a chairman and basically weak revenue and a weak EPS outlook, which was interesting because we kind of were flagging. I don't think we quite hit the top of the flag. Again, anytime you're looking at these sorts of moves over here, measurements, right? I'm just going to sort of eyeball it here. We probably got close. I don't think we hit kind of the top of the flag. We were probably a little bit higher. What was the key event of risk? Right there, earnings and earnings risk. A lot of traders will take it off right before that time. Okay, so that's one in the week, just something to be mindful of, folks. When oil goes down, we looked at a number of oil stocks. I'll tell you what, when oil goes down, transportation companies, I'm talking about the airlines, Delta Airlines. Actually, Delta had held up pretty well. It's down today, but Delta, American, United, the airlines here. What was the other one? Southwest is love, right? Southwest Airlines, a little bit of a bounce. Huge cost are, a huge input cost is definitely fuel and employee costs, specifically as it comes to those. So be thinking about if that continues to go down. I'm talking about crude going down lower. What could that do for transportation? Okay. Transportation in general. Now, I'm just going to say ODFL. I'm just curious about transportation there. So Old Dominion Freight Lines, there are others out there too, but just think about it in those terms. FedEx, closer to a break, maybe. I don't know about UPS. Remember, these are plays. That's kind of a little bit of a rounded short-term bottom. I can definitely, well, you could say shoulder, head, shoulder there, breaking above the highs. The target might only be here, but remember, they can also be helpful in forming those bottoms as well, right? Over this whole range. And we'll see if it goes. But that could be a key driver. Think about this into next week as well as we get into it. We looked at Chevron and others. Did you notice over there too, when we looked at those sectors specifically, we saw some of the financials and specifically big financials that might be doing a little bit better. If the economy is better, then banks will generally do better too, more loans, etc. There's a little bit of a trade-off too with interest rates there, but take a look over here. Do you see any sort of rounded patterns over here that could maybe flag and go higher that is post earnings, because we just started off with earnings to start this earnings cycle. Okay, so Citi as well, taking out highs. Okay, so looking at momentum areas that could be stronger, actually even strong, at least in line with the market, but perhaps stronger than the market as we move forward. There are others out here, but I think one of them sold off. It was actually Goldman. Oh no, it did. I'm sorry, it wasn't. It was some of the smaller banks. These are the larger banks. What did J.P. Morgan do? I thought they were, yeah, okay. They're kind of actually interesting. This is a little bit of a laggard, maybe in a sideways range. Now, some traders, as they look at a stock like this, might say, well, you've kind of run up. You had the gap. You're post earnings, and markets are still responding. You're sideways here, and so post earnings, they might draw a top range and a bottom range. If you start to break above that, some traders might say, well, that's a bullish, that's a positive, and they could look at it. I'm just saying with any stock, you could do this. If you start to break below this level, that would be conversely a minus. But in general, how are the other financials doing? Sort of like channel partners in a sense, or channel competitors in the same group up. That can lift that larger basket of financial and bank stocks higher too. Everyone we pulled up was showing some strength there. Now, Apple finally broke above its range as we're kind of wrapping this up real quick here. Some notes on Apple going forward. So, their iPhone shipments in China rose 20% in Q1. Now, they're reporting that ahead of time, but that can be a real driver. I know that they had the iPhone Fold, and there were some issues with it, engineering issues, and that caused a problem. I sent a tweet out real quick on Pepsi, just as a highlight over here. Prices were going, they beat quarterly estimates, and they also did a brand refresh. So will this resume a higher range over here too? I wanted to give you a few stocks to look at, but last one, and then we'll wrap it up here. Over here, Johnson & Johnson, a little bit of a sideways range, beat Q1 estimates, and raised full year guidance. So keep that in mind, folks. If you like today's presentation, do me a favor, smash that like button and just let Scott and I know this presentation was of value to you. And be sure to follow us on Trader Talks. And everybody, have a fantastic weekend. Thank you so much, Scott, for your help in the chat. Take care, everybody. See you next time.